All right, today is September 15th. It's Tuesday. It's the end of the market day. And we've got about another 20 minutes in today's market. And I just want to share with you what the overall performance of the day was. So what you're seeing in front of you is a 5-minute chart of the NASDAQ 100 futures. This is what we primarily focus on during the day in our live trading room. The adaptive entry system is the market metrics tool that we use in order to determine when we should get into a trade, when we should go long, when we should go short. Now, this system is adaptable to stocks for options, it's adaptable to indexes for options, and it works extremely well on a variety of, really an unlimited number of futures and commodities also. We primarily focus on the NASDAQ 100. It's easy to trade. It's also a great way for us to profile for our live trading room how to properly trade the system. So you can see there's a variety of signals that have taken place today. Each of the green vertical bars is a signal to go long. Each of the red vertical bars is a signal to go short. And the different colors of the price bars indicate whether we're in a long trend, a short trend, or kind of in a neutral state. So we just follow the signals. And today was really a great example of just follow the signals. We had a couple of bigger losses first thing earlier today. 1025 and 1045, we actually were stopped out at our maximum loss of 20 points. Now 20 points on the NASDAQ 100 on a single contract is $400. So, you know, that put us back a little bit. Depends on when you start trading. We have several people in our community that start around 7 a.m. and trade till the end of the regular market session, which is 4 o'clock. I usually draw a line somewhere around 3:30 and stop tracking trades at that point. And though, for those of you who do want to see what the detail is from 7:30 on, first trade today was 7:35. Last trade that we recorded today was 3:25. And so that's all the trade detail. What was interesting today is, and I was having a discussion with the head of programming and development for New Cycle Trading. They're the creators of the adaptive entry system. I was having a conversation with Craig, and I was just sharing with him, you know, kudos to the whole design of the system. You are, no matter what method, what system you're going to use, you're going to have some losing trades. And in more extreme cases, it's going to hit your maximum desired loss. We don't let it go any farther than that. In this case, as I mentioned, we hit those two 20-point stop outs, and then we ended up with, I think it was 16 by the time we finally ended up, 16 consecutive trades where we had 2 losing trades out of those 16. And several of them, the majority of them, we were able to just lock in 5 points. That's a method that we've been using here for the last few weeks because we see that the market is prime for us to be able to lock in 5 points generally quickly. It does not always go to 10, which is our ultimate profit target. So today was just a great example of, you know, we found ourselves down those two 40 points minus a 5-point profit. We're down 35 points, which is down $700 on a single contract. And then we just took them one trade at a time. There's no emotion attached to it. It's just taking the signal and doing what's necessary in order to harvest a profit from that signal or limit your loss and exposure. So what we do here is we take the performance results at the end of each day and we enter them into our trading plan. So the personal trading plan is a tool that's designed for our trading community to keep track of how you're doing. It's so easy to get preoccupied with and overwhelmed with what happened today. If you don't feel very good today, if it feels stressful today, if it's felt like it was, you know, like playing whack-a-mole, you're just trying to find something that's working. Pause, come to your trading plan, plug your current performance for the day into your trading plan, and settle yourself a little bit and realize that your overall performance for a single day will not dramatically influence the 12-month income forecast. So the whole purpose of the trading plan is to provide an income forecast, a financial forecast for what we always describe and think of as your personal trading business. You want to have a financial forecast for your trading business. So we come here, we plug in our performance at the end of every day, and it's going to tell us what our average number of points per day is on our winning trades and also on our losing trades. So I'll get to that here just in a minute after we plug in our performance. Now, I didn't do an end of day session yesterday, Monday, so I'm going to do that here. And I'm taking the data off of these two categories, trading from 9:30 to noon, taking all of the signals on the adaptive entry system, which there are 4 distinct signals. And then also we also track a financial forecast based on taking just the trending signals and the trend continuation signals off of the adaptive entry system and taking those from 7 a.m. to 4 p.m. So yesterday we did 10 points, which is $20 a point, 9:30 to noon, and actually we did 10 points in the 7 to 4 trend bias only. So I'm going to be looking at this, and I'm going to plug those numbers into our trading plan. So we're going to start with the 9:30 to noon category. We did 10 points yesterday. 10 points times $20 a point is $200, and our trading plan has now prompted us to be trading 3 contracts. So we made $600 yesterday. We're going to plug that in. And let that catch up. Seems to need to wake up the spreadsheet a little bit. And we did 6 trades and 3 contracts per trade, so we did 18 contracts yesterday. Today, we actually ended up with 0 points. Those losses, those 2 losses in the 10 o'clock hour, 10:25 and 10:45, we were able to overcome them, but not actually add positive gains to them. So we ended up with 0, and we did 9 trades at 3 contracts per trade, which is 27 contracts. Okay, so that covers Monday and Tuesday for that category. What we do is we come back up to our header up here. And we have this designed so that it's easy to recognize what our average performance is on winning days and what our average performance is on losing days. So the winning day average, which we anticipate in our forecast, is going to average 4 days out of every 5. We're going to have winning days. We've built the forecast. We consider the forecast to be very realistic because we know we're going to have losing days. And so we anticipate that we're going to win 4 out of every 5 days. This is designed to be a 12-month forecast. So we started with $5,000. We are willing to allocate 10% of the account to contracts. Each contract, when you're trading the NASDAQ 100, requires $500 of margin. So 10% of our account balance is allocated to contracts. So in order for us to get to 2 contracts, scale up to 2 contracts, we would need $10,000 in the account. 10% of $10,000 is $1,000, and each contract requires $500 of margin. So you can do the math, and in order for us to scale up to 3 contracts, we would require having $15,000 in the account. So the cool thing about the trading plan is it's going to scale contracts for you, and of course you can override that at any time. But the other limiter is after 10%, you can put in a maximum. Like you're not going to allow it to grow beyond this maximum number of contracts. So we've capped ours for this year at 3 contracts. We're not going to trade more than 3 contracts. That may change later on the year, but for now, we are about 10.5 weeks into our year. So we've still got quite a bit of year left. We're going to leave it capped at 3 contracts. All right, so that explains the contracts and how we decide how many contracts we're supposed to be trading. Now let's go back up here where it's telling us that our winning days are averaging 22.22 points per day, and our losing days are averaging 26.55 points per day. Now there's another dynamic that's built into that, and as I said, we're at 10.4 weeks into a 52-week forecast, and we have had 17 losing days. So our plan, our forecast for 12 months is based on losing at the rate of about 1 day a week. We are ahead of that pace. We are at 17 days, although we're only through 10.4 weeks. And so these two calculations of the average wins and average losses take into account the fact that our frequency rate of losses is slightly higher. Now, before you're too alarmed with that, let's see what the numbers tell us. We're averaging 22.22 points per day for wins, so we're going to put that in here, 22.2. Just round it off. And our losing days are averaging 26.55. So I'm going to put in minus 26.55. All right, so what does that tell me? Well, it tells me that if we continue to perform at the current run rate for the remainder of a 52-week period with 42 weeks already behind us, sorry, with 10 weeks already behind us, so the remainder of a 52-week period with 10 weeks already behind us, that our $5,000 starting balance would give us an income of about $187,800 over the course of 12 months. Now, I think that that's outstanding. Now, that 12-month forecast has actually decreased a little bit over the last couple of weeks because we've had a slightly higher rate of losing days. But I believe that everything runs in cycles. So we go through a period of a higher frequency of losses right here. But in the beginning, we went through a whole period of no losses at all for, I think, almost 3 solid weeks. Was that a fluke? I don't believe that flukes exist in trading. I think that there are cycles. Some of them are bigger picture cycles, longer term cycles. Takes longer to recognize, the different phases of each cycle. But for now, what we're seeing is that if we continue at this run rate, even though our frequency of losses is higher and the average of our losing trades has grown a little bit, we're still looking at an income potential of $187,000. Now, if you're disappointed in that as a trading business owner, you had your heart set on something higher than that, even though you started with only $5,000, you can influence that right here. We have what I consider to be an ultra-conservative maximum of 3 contracts for our 12-month forecast. I consider it to be ultra-conservative because we, as I said, first of all, are limited by never allocating contracts greater than 10% of the balance of the account, and then we can limit that to whatever we desire our maximum exposure to be. So if I decided that I'm really comfortable with my run rate, I understand that I'm losing slightly faster pace, and I have a smaller profit per winning day than I had originally planned, set that aside. We're taking your current run rate at these levels and forecasting it forward. And that's showing you $187,826 income. But if you felt like you wanted more and you're really comfortable with your run rate, what if you change this to a maximum of 5 contracts? Well, all of a sudden your potential income for 12 months goes up to $292,580. You can change that to whatever you desire. The only way you're going to get to 5 contracts is 5 contracts at $500 per contract for margin is $2,500 a margin, and that is 10% of 25,000. So the account value would absolutely need to be 25,000 or more before you're ever going to devote $2,500 of capital to margin. So those two factors together, the 10% limiter and then the maximum number of contracts are your way to influence what your total income could be using the current run rate that you've established. So I'm going to leave ours at 3. I think it's a very conservative estimate, and frankly, anybody who is dissatisfied with going from 5,000 to 187,000 in 12 months probably has some level of unreasonable expectations. But that said, if you're very comfortable with the run rate, you know that you could knock that out even though it's a little less attractive than what originally had been planned in the forecast. You can influence it by the maximum number of contracts. Okay, so the other category we track is trading from 7 a.m. Eastern to 4 p.m. Eastern, and only taking the trend bias trades and the continuation trades. And the reason we track this one is because some people don't want to take all of the signals. They have jobs, they have businesses that they are actually involved in while their trading computer might be open, and they can take a limited number of signals. The other category is for those folks who don't mind taking all of the signals, all 4 signals, and taking them from 9:30 to noon and then be done for the rest of the day. So on Monday, now you see how this is a negative number. We allocate for 1 losing day a week on an average, and just for the sake of simplicity in the forecast, we plug that in on every Monday. So Monday's number was intended to be a loss of 18.4 points, and in fact we actually made 10 points. So 10 points at $20 a point is $200, and again in this tracking forecast we're trading 3 contracts, so $600, and we did 14 trades. So 14 trades times 3 contracts per trade is 42 contracts. Okay, and then today's performance, we were up 36.5 points, so 36.5 times $20 a point times 3 contracts per trade is $2,190, and there were 12 trades today. So 12 trades at 3 contracts per trade is 36 contracts. By putting in the number of contracts, we're taking care of estimating our costs, or allocating for our costs, commissions, fees associated with our trading. So our net profit today after fees and commissions is $2,046. Okay, now same thing holds true up here. Our loss run rate is we've lost 10 days in just over 10 weeks. So we are right on plan in terms of our allocation of losing days. Our winning day average is 34.42 points per day. So I'm going to plug that in, just slightly lower than what I've been forecasting. Oops, that's an incorrect number, 34.4. And our losing days, losing points per day are 22.64. We had a couple of losses last week. We actually hit our biggest losing day that we've had in 10 weeks last week. So that increased our average points per losing day. So I'm going to adjust that so that we have a proper reflection of our losing days, 0.64. Okay, so using exactly what I just explained to you, we have now forecasted the remaining 42 weeks of the year based on the current run rate that's been established in the first 10 weeks of the year, of the 12-month forecast. We have our number of contracts maxed out at 3, and we have a $351,000 potential income. I say potential because there are no guarantees. It will depend on what is your actual run rate for the remainder of the year, how diligent are you about adjusting your forecast based on that run rate, and then of course you can always adjust the total number of contracts. If you wanted to have 5 contracts, you could go from 5,000 to possibly over 500,000 in the course of 12 months. You can set that at whatever you choose. This number of contracts should never be adjusted from a very conservative number until you are 100% confident in how you established the run rate, how you established your run rate. So I'm going to put that back to 3, and I'm going to leave the forecast at 351,000 over the course of 12 months, and I think that that's a very realistic forecast. Last thing I want to do is just share with you the averages here. We do a fair amount of tracking and stack ranking, so I'm always looking at, well, what's the best performing category, meaning a combination of time frames being traded and what signals are being traded. In this case, it would be all signals looking for 10 points of profit from 7 to 4. You know, here's a category that is taking only the trend bias and continuation trades looking for 10 points of profit from 7 to 4, or our 9:30 to noon category that we already talked about. So we take a look at a variety of categories. We've got several that we're still in the process of researching, but the ones that we have reasonably well established data on, we stack rank. So the number one category for the lowest number of negative days is trading from 7 to 4, all signals. So if you decided you wanted to trade from 7 to 4 Eastern, trading all signals, there have only been 5 losing days out of 66 trading days. That's a really strong number in my opinion. That's the best overall ranking. That also happens to be the best overall ranking in terms of point production, averaging 69 points a day at $20 a point per contract. And then the win-loss ratio is 72.8%, which means basically we're winning on 72.8% of all of the trades we place. This ranking, although it's ranked number 5, look at where number 1 and number 2 are. Number 1 is 75.5, number 2 is 73.7. They're all nestled right there together within, 2 to 3 points of each other. So I don't consider that to be a significant variable. And so then what we do is we total up the rankings of those 3 categories, and the lowest absolute value ends up being what I consider to be the optimum performing category. So I like that category. I also like our 7 to 4 trend bias and continuation trade. It happens to be the second best ranked category. And we don't really consider anything that starts at 3 a.m. That's more for data collection for down the road when we are able to turn on some auto trading. So that's the summary for today and for yesterday. Pretty happy again with the day's performance, despite the fact that we started out with a couple of 20-point losing trades. Now, I'm going to be really frank and honest here. As much as I say, you just take the signals, there's no emotion involved. It is emotional when it's early in the day, you're not even in your first full hour of the regular market session, and you take a 20-point loss. And it wipes out the 3 prior trades that you might have taken. And then 2 trades later, you take another 20-point loss. Well, you are human if you're asking yourself, do I want to keep trading today? I'm a huge fan of you just continue to take the signals. And today is a strong validation of that when you look at the number of trades that we ended up taking, where we're able to lock in 5 points. And then later on in the day, we were able to lock in a 10, then we lost one other 10. But most of the day accounted for 5-point signals, and it just felt like it was kind of a slow and sluggish day, but a slow and sluggish day produced some really nice profits for us overall. So always appreciate those of you who are in our live trading room being here. Always appreciate all of the exchange of ideas and comments that we have throughout the day. And if you're just listening to this as an update to learn more about who we are, the Adaptive Entry System is one of the most powerful, consistently performing market metric software tools that I've ever encountered in over 35 years of trading. And I personally would not want to be without it. So kudos to the team, Craig, and his team at New Cycle Trading and Analytics for producing this tool, and we're grateful here at Options Moneymaker to be able to be their representative and profile this here in the live trading room. Have a great rest of your day, everybody. We'll be back to trading tomorrow morning at 8:45.